Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, as always, man, thanks for having me.
The question that we got from a listener, and I'm sure in the mind of most people listening to us right now, we saw the big drop in the markets last week, a recovery. Was that the whole event that perhaps you'd been warning us about?
No. Not at all. I do not believe that for a minute. We try to walk through this and methodically explain it. We had an intermediate degree low back in August. And, you have time parameters that you work in. You go, okay, well, this intermediate term cycle or whatever the degree of cycle, based on history and statistics, that 70 or 80 or some cases 90, whatever the percent is, whatever the parameters happen to be, that, okay, from, that this particular cycle, this is the personality traits of it, and it averages from low to low this time span. Well, that said, we know that the last intermediate term cycle low occurred in August. And we know that low is due right now, in mid-February, mid to late February. And then backing up one more degree, next higher degree cycle, there's an annual cycle that we know, based on statistics, is averaged just over 12 months. And I know that it last bottomed in November of 16, which means it's also very stretched. And so we had, as we went into the blow-off mode, if you will, starting in November, as I termed it, because we had some DNA markers that tried to bite, they didn't, and then I said that we'd gone into, I thought, blow-off mode. So as we went into that, those cycles got extremely stretched. And so in doing so, it compressed the time on the other side of the cycle, if you will, because, like I said, we have that intermediate degree cycle that's due this month, and let's just call it mid-month plus or minus. And then we also know that because that cycle of the next higher degree was stretched, that it should bottom with this intermediate degree cycle. And so the time compression factor becomes, did you get those higher degree cycle lows in 9 days down? And, probably not. There's not enough data at this time to make the assumption that we did or that we didn't. But based on that fact alone, I want to say probably not. I know that the intermediate and annual degree cycle low is due. But I can't say right now, one way or the other, if we've had it. There's just not enough evidence. That said, I think the safe assumption is to assume, based on the time constraints, is to assume that we probably did not correct that higher degree cycle in 9 days, and then let the market prove otherwise. Now, with regard to VTOP, and, we've talked about this being a bubble. It's been a bubble. And I don't remember if it was you. No, it was someone sent me some minutes from the Fed. And it was with the new Fed chairman, I think, talking about years ago how this was a bubble. And it was one of my subscribers sent me that. And so, the point being there is that, it's undeniable what we're dealing with and the extension and extremity of it. And I don't think that we have seen the top yet. I don't think it's over. I mean, in a perfect world, looking at, the way stuff sets up in the past with markers and statistics and the structure and so forth, I would really like to see a little more weakness down into this intermediate and annual degree cycle, extended annual degree cycle low later this month or perhaps early next. Don't know that we'll get that, but that's what I'd like to see. And then another push up for a couple of months, and then see the rest of the stuff fall in place with that advance. I don't know if that's going to happen or not, but I don't think at this time that we've seen the top, that the bubble is done. I do not believe that. And to reiterate, until proven otherwise, I don't think we've seen, at the same token, I don't think we've seen this intermediate and annual degree cycle low just yet either. So,
Tim, I would describe it then as there was a little ripple on the bubble, but it wasn't the bubble bursting.
I don't think so. And here's the thing that, some other people have asked me, they said, well, could it have been? Well, we've seen things that we have never seen before. Obviously, with the most extended, most, stretched, overbought, overvalued, however you want to say it, market in history. I don't know if I talked about this in our last interview or not. They run together, and I don't remember exactly what we talked about. But, I had mentioned some of the valuation models and how they've been at extreme readings for a long time, a long time. But, this last month with the January close, I saw some technical readings on some technical indicators that I have stock prices that go back to 1800 before the Dow Jones Industrial Average. It kind of comprises or approximates the Dow Jones Industrial Average prior to 1896. And, we've seen technical readings, the most overbought technical readings since the inception of that data in 1800. So that tells us what we're dealing with in the extent of it. I mean, I think it's a catastrophic collapse ultimately, but I just don't think it's properly set up yet. Could it be? Yeah, we have the inkling, and I mean by the skin of its teeth, we have some of the markers in place. But it's not really solid, and I would have to see some things really develop here convincingly with either this like I said, this intermediate and seasonal annual degree cycle low that's coming in, and I don't think that's possible. I just do not think that's on the table that we're going to see that there. And so I would have to see things really turn around and change and see structural evidence and a primary bearish trend change and some stuff following this intermediate degree low to make me think otherwise that the bubble top is in. And like I said, I don't mean to sound confusing. I'm saying that, no, I do not believe that it is. I'm saying, is it possible? Anything's possible, but we have to see that evidence, and that evidence is not at hand.
We'll have more. We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, one of the comments I've heard about what happened with the that rapid drop in the markets was that it's going to create what some people call a dead cat bounce, or I call it more of a sucker's bounce, where it looks like everything, all the dead wood's been cleared out. The market starts to climb. The people who had withdrawn and held some cash take it and throw it into the market again, expecting it's going to be smooth sailing all over again. And then that's when you have that catastrophic drop. Is that what you think is going to happen?
Yes and no. I think that I think the dead cat bounce could be now. And that if we haven't seen that intermediate and like I said, that annual, that stretched cycle that began in November of 16, if we haven't seen that low, then this is the dead cat bounce in relationship to that cycle, and then we get another drop into those higher degree, that intermediate and annual cycle low. So yes, I do think this is a dead cat bounce from that perspective. But once those lows are solidly in place, be it that they come with another decline down from here, or be it that it proves that we've seen those lows in a mere 9 days down. Either way, I think that there is another rally. I do not think this setup is complete. It just, like I said, things changed in November with the evidence of the blow-off mode and where we are, and in the relationship with commodities and gold and everything else. And I think for the first time in a couple of years, the roadmap is the fog is lifted a little bit. I feel like I know what's developing, and I don't think it's fully materialized yet.
We'll have more with Tim Cyclesman Wood right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with gold in all this?
Well, ultimately, we've been talking about gold and commodities peaking here. And we had a turn point in January, the early January, and then it bled over into early February. The early January turn point did not bite. I knew that probability was then high that it would bite in early February, and it did. That turn point, if you'll notice, the dollar, now the last few days the dollar has been off, but the dollar bottomed. I think it was January 25th, going into February, obviously. And then we saw one by one, we saw the commodities peak, we saw gold, oil, and we saw the turn in equities. So all of those transitional moves happened, and they're still underway. Now we're seeing all these counter trend moves and, as you said, dead cat bounces and so on and so forth. And I think what we're seeing in gold is the same thing that we're seeing in equities. Now, if you look at, here's the canary in the coal mine, I think, with regards to gold. At every turn, the gold stocks have been leading. When I say every turn, every cycle top and bottom, the gold stocks have been leading gold. And silver has been relative to gold has been weaker as well. But if you look at particularly the gold bugs index, the HUI, it broke on this decline into earlier this month, a few days ago, last week, whatever. It broke below its December low. And we know, and we talked about it, that the December low was an intermediate degree low in gold and the gold stocks. And like I said, the metals have not broken that low, but the HUI has. The XAU has not. The HUI has. And so the fact that it has broken, it tells me that there is a problem with gold. It tells me that this ideally should be a counter trend bounce now with the HUI and consequently the XAU, even though the structure's not broken there. And the fact that gold has not broken that same structure, it does leave the door open for, gold to possibly, better the most recent highs, but it tells me there is a fundamental problem with the metals. And so, like I have talked about, this intermediate term cycle that we're currently in should tell the tale with either that we get the washout into the 9-year cycle low ahead in gold, and that is the most bullish thing that could happen for gold. Because the flip side of the equation is that if this intermediate term cycle proves to tell us that, or proves to confirm structurally that we had the 9-year cycle low in 2015, then I've said it numerous times here before, and I'll say it again, this is a pathetic 9-year cycle advance in gold. And I mean, look at the pointing case, look at the HUI. Show me another 9-year cycle advance where you had moves like this, where you violated a previous intermediate term cycle low like this. It's not healthy. So there's something not right here that the gold stocks are telling us. And, I consider myself a gold bug. I've looked forward to this 9-year cycle low. I've been thinking that it's going to line up with the bursting of the bubble. And that, there would be a safe haven, for people, and that would be gold with this 9-year cycle advance. And I still think that may be the way this is lining up, that we're just not quite there yet. But the flip side of that is if we prove that we had the 9-year cycle low in 2015, then what this is going to be telling us is that it's setting up for all asset classes to collapse together, and that there's not going to be a safe haven with gold. And I know that sounds crazy, but I'm just telling you what the structure says. So this intermediate term cycle with gold is critical, and the behavior we're seeing with the gold stocks here at this point is not very promising. So, we got to let it play out.
Well, Tim, you've said in the past that there's no embarrassment to go to cash if you're not sure what's going on right now and what direction to take. Why not just step to the sideline and see how it plays out?
Well, and that's a good point. I had an old timer tell me one time. He said people think there's only a couple of positions, and I don't remember exactly how he said it, in the market, in being long or short. And he said there's 3. He said long, short, or neutral, and it was a very wise statement. And at the time, he added something about, he said, and there's times to be aggressively neutral. And so, like I said, we're basically in this transition period where the metals are trying to prove to themselves and to us, the market. People used to say, listen to the market. Well, that's what the structure tells us. But we haven't seen enough of that structure yet to know with certainty, like I said, whether that 9-year cycle low is in or not. And that's about we're going to know in the with the remainder of this intermediate term cycle over the next couple of months. We're going to have that answer. And then at the same time, what we're seeing is that we're seeing either we're going to see proof that we have seen the top in equities, which will come with a Dow theory primary bearish trend change, but after an advance, after a rally. We're not there yet. Or we're going to see what I think is probably the preferred scenario, is that we get this intermediate term low and we get the last push up. And like I said, in all, we're in a box. We're in a window. We're in a technical window where all these transitions are taking place, and it's all the stage is being set up in conjunction with this top. So I think that's where we're at. I think bonds are moving into a major low. Not quite there yet, I don't think. I think the dollar is making a major low. I think gold is hopefully going to push into a major low. And then in the meantime, equities are, doing their thing to finish the setup.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.